We want to focus on this morning's bank earnings. Dom just told us about Bank of America. Morgan Stanley due out in just a little bit, and we are getting ready for a flood of regional results, too. Joining us right now to talk more about this is DCLA managing partner and portfolio manager Sarat Sethi, who is also a CNBC contributor. And Sarat, what do you think so far? Banks have been really strong. If you look at JP Morgan last week, what do you think of Bank of America today?
So I think you're right about JP Morgan. I think going into this earnings season, especially what happened with the regionals in the quarter, expectations were pretty low. And if you look at Bank of America, net interest income was up, loan growth was up. Those are two things that we were all looking for, especially kind of where we are in the economy. Investment banking, I think that's going to be pretty bad for all of them. Really haven't had much capital markets activity. So looking at that for Bank of America, I think that was a positive. The stocks have been a laggard compared to the rest of its competitors. It's down 11% for the year. JP Morgan's done better. And, you know, when you look at Morgan Stanley, they're the leader in wealth management. So that's going to be interesting to see where they come across on that side and really what activity they're seeing in investment banking and capital markets as well.
I guess with Morgan Stanley, you have to look pretty closely at the markets, equities. We'll see what happens as they kind of roll into that. Do you have anything you'd be looking particularly closely?
Yeah, for them, it'd be the wealth management. 60% of their business is wealth management. Really, how did they optimize that business? You know, we've had a good wealth management for the first 6 months. Stock market's done well. How has Morgan Stanley handled that? And I think if you look at their balance sheet, it's a very strong balance sheet compared to some of their competitors. So a different bank, but that bank has been hurt like the rest of the banks. So I think people will be trying to focus on that for different things. But Bank of America, you know, so far came out with numbers. It'll be interesting to see what they say on the call because it's really the future loan growth. How is that going to get affected?
You know, I'd heard some rumblings that we could be seeing some tougher capital controls required by regulators coming as early as the 27th of July. If that's the case, would that change your opinion on any of these banks if they have to set more aside?
Not really, Becky, because if you look at kind of their multiples right now, they're trading in single digits. They've already been discounted pretty badly for these things. So unless there's something really radical, what's really going to happen is, you know, higher reserves, and the stocks have reflected it. So really, it's going to be their operations and their ability to grow earnings. That's what we're looking at. And at a value like this, and we've talked about this for a while, the S&P trading at 17 times, the whole banking sector trading at, you know, high single digits. You really have to pick the good companies. We believe that JP Morgan's, the Bank of America's, the Morgan Stanley's, the ones you want to own. And it'll be interesting to see what the regionals say. I think that's where you're going to get more of, hey, how much more capital are you going to need down in the future?
Sarat, if you look at earnings overall, last quarter, there was a lot of hype around AI, a lot of excitement around it, and that's kind of what people were paying attention to in the quarterly calls. What about this time? Does that still exist, or do you really have to put up the numbers this quarter?
I think you really have to put up the numbers this quarter. AI has done great for the stock market. Multiples have expanded, especially in the tech sector. Those companies are going to have to show that their earnings are much stronger than expectations. I think given where we are in the cycle, earnings have to catch up to multiples. We've had that only the multiple expansion. So for companies that have benefited for AI, you really have to perform. But some of these other stocks, though, these sectors like financials, and even when you see healthcare coming, if they can perform, they're already cheap. And I think that's where kind of we need the market to lead outside of the AI, the big seven leaders.
Does that mean you don't, you're not a fan of any of these tech stocks right now, or at least the seven who have really had their run?
No, absolutely not. I mean, we own NVIDIA, we own, you know, Google, but not in the size of the market. I think you have to be diversified. You have to understand what you own and take some profits and put it into sectors that haven't done well, but high quality companies. Look at the balance sheets of these companies that just like of a Bank of America or a JP Morgan. So definitely own them, but just be careful in the size because the expectations are so high going forward for the next couple of quarters.
How have you shifted your allocation, just in terms of what sectors you think are best? How are you versus where you'd normally be?
So we are definitely underweight. What I call the growth area. Definitely putting more money into value sector. So that's healthcare, that's some financials. And really nibbling at commodities. I think given where you have the dollar globally and the need for commodities, so I think that's an area too. So areas where the market really hasn't focused, stocks haven't done much. They're either down or up very small for the year. I think having a diversified portfolio, especially now, given the growth that you've seen in some of these high stocks, that's kind of a good place to be.
We haven't talked about commodities outside of oil for quite a while. Are you looking at commodities outside of oil? And I asked just when you saw what happened yesterday with wheat prices, based on the idea that Russia said it's no longer going to offer safe passage through the Black Sea for Ukrainian wheat, as it had done for the last year. How does that shake things up?
Yeah, I think that's a really good point. I mean, we're looking at copper companies, steel companies, aluminum companies. One of the things that we haven't really focused on in the last 5 years, even the decade, is there hasn't been a lot of investment in some of these commodity companies. So even if you get a little pricing in there, which we think you can still have, these companies trading at single digit multiples, much stronger balance sheets. So that's an area that, if you look at the market value of Apple and Microsoft, it's greater than all the energy and basic materials that are in the market. So I think there's definitely opportunity there, and investors really haven't focused on it.